Larry FX once again, and today we are going to be talking about the volatility 10 index. Yeah, so for the volatility 10 index, we currently are on the daily time frame. Now, we'll click on this, we clearly understand that we have been on the daily time frame for a while now, and when we select from this particular area, which is one of the highest points market has gotten to, select through the high down. Would understand that there is a trend. There's actually a pattern coming from the downside, which clearly identifies to us that this is a downtrend. Now, having understood the fact that this is a downtrend, we can now note this particular level. Now, this level shows us the possibilities, or shows us a clarity that the trend has changed, which now places us on. So first of all, let me explain. This shows us that market was on a downtrend, meaning that all of these levels here are downtrending zones in the market. Now, by virtue of this point breaking to the upside, market clearly showed us that we were on a bullish trend around the zone. Now, by virtue of this market breaking at this point also, we are currently on downtrend. You understand? So basically, this is all we have in terms of understanding trends we are working with at the moment. So now I'll be removing these markups. So I did that to explain to you the trends we currently are sitting on. Now, that being the case, we can now go to the smaller time frame, which is the 4 hours time frame. Now, this 4 hours time frame is basically still just going to help us understand the trend we are playing around with, understand, or we are working with. Now, let's wait for it to load, and we get to the 4 hours time frame. Let's wait. Basically taking a little bit of our time. Okay. Okay, very good. So it took a little bit of time, but we are back. Now, this is the downtrend. In downtrending markets, what are we looking out for? In downtrending markets, we are looking out for basically sales, and then we are looking out for majorly sales. Now, if we are taking buys during this downtrending market, we are only taking short-term buys, long-term sales. Now, taking buys during this kind of uptrending market poses more risk. Now, we can now go to the 1 hour time frame. Before coming to this downside where we have the current market playing out at, we would start from this particular area. So, first thing we can see on this market is we can see liquidity being taken out from this particular area, which is this point. And then we can see structure being broken to the downside. So basically this liquidity, the zone which took out this liquidity, or the zone which created this liquidity basically, is this low here. You understand? Now, this is also a low around this particular point, which is still important. So instead of just marking this zone, I can just come here, mark this zone in order to cover all of these areas. You understand? And that gives us a very defined breakout structure. Now, that being the case, what are we going to be looking out for? We know already by now that I do what we call marking our zone. We should call this our BOS. Or let me use BOS clear. Then we call this our liquidity. So we call this our L, which is our liquidity. And then one thing we can now see is we have this level. We have this level of resistance, which is our swing high, and we have this level which is our swing low. Before market began to retrace to the upside, because the breakout structure extends into this point. It also got the reasonable breakout structure. This was a retest based off of this particular internal breakout structure. Our market actually respected that particular area. So let me show you what market did at that particular point. It gave a breakout structure here. I expected it from this swing high to this swing low. So you can see market expected between the swing high and the swing low, and this was exactly the trade. Take yourself from this particular point. Put your stop loss here. And take profit here. And that is for this particular trade. So now that being the case, basically mark this which is our level of entry from the 6.18. Very good. So now that being the case, the breakout structure created at this point, which is this liquidity, this breakout structure, we actually got markets reacting from this particular level, which is this swing high, and it reacted to the swing low, which is this particular low. Now, that being the case, we clearly understand that whenever market gets into our swing high and our swing low, like whenever market gets into between our swing high and our swing low, which is where we have this retracement at the moment, we always look for our sell, and this is what we have. Market got into expecting the 0.618 level once again, just as it did at this particular point here, and we pick our two. I'll take it down to this point. So this being the case, we can now find out that market just got to take profit, which created a new breakout structure. Now market got to take profits, which created a new breakout structure, and actually there was also a breakout structure at this point, a retest, just as what we had here, and I would simply mark that level out so that you guys can also understand and see what happened in the market. So we have this level was taken out also smaller time frame, and we have market relating from our swing low to our swing high. Basically, this is our swing high, this is our swing low. So now this being the case, basically all we can do is we set our stop loss, which is at the swing high. So we set our stop loss, which is at the swing high, and our take profit, which is here. So this is actually our levels being met once again. But this time around, our levels got met at 0.79 level. Now, what it simply means is if you are taking the first trade, market actually hit us out, and then the second trade went in our direction. And that is what it means. So now, that being the case, we now look out for what has happened in the market again. We can clearly see that the market created this major break of structure and this area which became our new liquidity graph, which is this point. Now I would want to delete these guys so we can be able to see what happened in the market now. So this particular level became our liquidity graph, which created a new break of structure. So this level became our new liquidity graph, which created our new break of structure to the downside, and market rallied again to the upside. Now we have the markets move this way. Now what we can clearly see was after the take profit got hit, market rallied again back to the upside, tapped into the 0.79 level, and market dropped again to the downside. Now we can have we can have our SL sitting at this point. So just be patient with me. Now I always like to give a rundown ranging or starting from the market, which from what has been happening in the market, that's in a long way guides us to helping us expect the next move in the market. So this actually was the reason, and this was actually what caused the trade for this particular sell. That being the case, many structures also hit here at this point, smaller structures. Market also gave us another level at this point, which was our liquidity graph. Liquidity got taken here. Structure got broken at this point, and also at this particular area. But this was a major level which was broken. But then that being the case, we also have structure got broken at this particular area, but this is a major one. And then we had this point as our swing high and our swing low. And we can clearly see that market got into the 0.618 and also tapped into the 0.79, hitting our stop loss, which we kept at this 0.78 level. Now we'll take the trade from this place, which actually went to our direction, and we mark this out. So you can clearly see that some of the trades actually, the first entry we made, most of them got hit, stopped out. So any trade you are seeing us taking from the 0.79 level, we got stopped out from the first entry level, which you can also see. We try to make all of these things very transparent. That helps you to be able to understand and see what we are able to do with the strategy. So now, that being the case, we are now on the current market, And what can we clearly see? We can clearly see this level, which is our break of structure. And let me see what this line actually holds for us. Okay, I will explain the line shortly. So this line actually was the level where we understood that market took out this particular point. So let me use a better line so that we don't get confused. So this line actually is giving an indication that this low overall point was taken out by this particular candlestick, the bullish engulfing candlestick. I would clearly be anticipating buys into this level and then sells back to this low. But the original way is the market's on a downtrend, we just take only sells, no buys. But that aside, let's start from what happened at this particular area in order to understand this whole structure. Now, the first thing we got was liquidity being created here before market pushed to the downside, and we have liquidity. Now, using the strategy, we always would like to get a liquidity grab before the drop. Now, what does this help us to do? Liquidity grab simply tells us, liquidity grab tells us that there are people who actually placed sell orders, which the market rallied to the upside by stopping them out, stopping their sell orders at that point. So whenever market breaks to the downside, it goes back again to give us a very wonderful entry. Now, you would see what happened, what I just explained in this particular analysis. Now, you can see market from the swing high, we took all this trade basically, but it was really noisy. From the swing high to the swing low, you can clearly see what happened. Market got into we took our first trade, which hit stop loss, and took the second trade at this point. Now, the second trade we took basically the stop loss was at the swing high, take profit at the swing low. Now this was the take profit here. Okay, sorry about that. So this was the take profit at this point here. So this was exactly the take profit at this point. Now, there was also an internal break of structure inside this particular character. So placed us for re-entry in the market. And we also had another break of structure inside this particular point. Now, at the end of all of this, markets actually retraced into that level, and that was what created the final break of structure. So two take profits would have been hit. Internal structure take profits here, the final major entry take profit at this point, which was a wonderful trade. Now, if you would want me to give, okay, I'll just simply do that for you guys. Now, the second entry, the internal entry was at this point here. The swing high, swing low was here. And market got into the 0.79 level. And this was the re-entry using this particular method. We got our re-entry from this point, and our final take profit at this particular level. And that was it for this. So I want to get this. So I want to get this particular tool out of that. So that was the particular entry. First entry stop loss was at this high. Second entry stop loss was at this recent high and the swing low, and this was the entry. So now this particular strategy is really wonderful. It helps you to be able to understand the kind of entries you want to take from the market and properly increases your risk to reward at a very high rate. Now, like, it gives you a really high win margin. You see that we actually hit stop losses, but stop losses we hit they are not more than the take profits we hit in this particular analysis. and market breakdown. Now we have this particular level and we have this particular low. Now you can clearly see that we had liquidity taken out from the upside and then structure broken to the downside. And then what can we see now? I will remove this was me analyzing before I decided to make this video. Now we had liquidity taken to the upside, structure broken to the downside. And what did we clearly do? We simply mark from our swing high to our swing low and we take the trade. Now originally this is the final take profit, but then before that this was the major take profit, you understand? Now this final take profit actually, I think there was a level for that. Okay, this was the reason for the final take profit. Now this particular point, what do we clearly see? Liquidity taken to the upside, structure broken to the downside. And now whenever we see that, it really gives us a stronger potential, like it gives us a clarity that we are actually going to go for a really profitable trade and a high possibility entry. Now what can we see here? We can clearly see, just as I've explained, okay, and we cancel from our swing high and swing low. So we can clearly see this is our high, which is our swing high, this is our swing low. You understand? So from our swing high to our swing low, we can clearly see that the trade was taken, and this is actually the major risk to reward. Now, if you are taking it at the overall low or this point, which is our point where we love to take final take profits in this particular setup, it's also fine. But then this is actually the trade which we have taken and which is okay for us. Now, what are we anticipating at the moment on this particular chart? If profit hasn't been hitting, we'll be looking at this particular level, which is the new liquidity which has been taken. And we'll be looking at this low, which is the new low which has been taken. And that's a break of structure. So all we are going to be doing is we are going to be picking from the new swing low. We are picking from our Fibonacci from the swing high to the swing low, and then we're looking out for market to retrace into these particular highs, respect whether it's 0.79 level or the 0.618, and we take our entry from that particular point, having a good potential rate of our risk to reward ratio. Now we simply pick our Fibonacci. This is actually creating a low, which is not yet verified because market has not rallied to the upside massively. But then potentially, let's say we are using that level, we'll be looking at taking our first entry at this point. So we'll simply be looking at taking our first entry at this point, and we can be risking $50 on this trade. Now, we're risking $50. You see, it's a 1:3 risk to the reward ratio thereabouts. 1 ratio 3.45. That is for this particular first entry. And then the second entry poses to us I think a 1 ratio. Yeah, so it also poses to us a 1 ratio 3.8. Now, these are the two trades, these are the setups we are looking out for, and these are the trades we are looking out to take on the volatility 10 index. Now, someone may ask, what if market continues dropping? What do I do? You have to readjust it from the swing high to the swing low before markets began to retrace to the upside at least 50%, so that you can be able to understand that yes, that is actually the major swing low, and then we are looking to take entries from this particular 0.79 and 0.648 levels. So that will be all for today on this particular volatility 10, giving you the breakdown of the market in order to help guide you in taking informed decisions in taking your trade. Now, this is Larry FX Academy. I would also appreciate you all give us a follow at our Larry FX Academy channel, YouTube channel, and click on the notification bell icon the thumb bell icon to also get notified anytime we upload a new video trying to explain and give you directions on what to do exactly in the market. Do have a wonderful day, and one love, peace, RFX Academy.